Welcome back to Power Lunch. Time for today's three-stock lunch. And here with our trades is Rebecca Walser, the CEO of Walser Wealth Management. Rebecca, thanks for joining us. First up, we've got your trade as Apple. Needham analyst is overvalued amid growing AI competition. So, Rebecca, Apple shares. Do you agree with analyst Laura Martin for a stock that has been an underperformer this year?
I absolutely do. And it's not really Apple's fault. It's all the, tariff talk and all the fact that, they have very heavily relied on supply chains to be in Asia. And obviously, this is a direct trade war between the United States and China, and it expires July 9. So it's really concerning to us that we haven't seen headway. Apple is going to have to make, obviously, major investments that are going to take long years for infrastructure duplication, what they have in Asia, outside of Asia. We know that Trump had exempted cell phones potentially. However, he's also directly said he wants the iPhone made in America. The price right now is really trading right in between its 52-week high and low, so it's not over or undervalued right now. And so right now it's just all analysts universally consensus it's going down until we get tariff policy resolution.
All right. What about Netflix then, which is going the other way to a fresh all-time high with UBS raising their price target to $14.50? The stock is up 40% this year. It's doubled from a year ago. Do you like it? Do you own it here?
Yeah, so this is a surprise a little bit to me, Kelly, because, this is a very expensive stock right now. Their PE ratio is 57. It's the highest in 3 years. Their forward PE is only 48, but they're still pretty high. And now they're trading above their 52-week high, as you just said, at 1241, when the 52-week high was at 1235. So they are actually on the upside. The thing that concerns me is that we did get subscriber growth in Q4, 18 million for a total of 302, subscribers. But that ended, as you guys know, in Q1. So when we no longer have subscriber growth, and so when they're talking about 27.7%, year over year growth, I get concerned because we don't get to see the data going into the subscribers. And so content is all about what is going to drive it. And they already had their crackdown, their 2023 crackdown on password sharing, which did see a bunch of subscriber growth. That's already happened. I actually do have some issues with the way they do their IP crackdown with IP addresses, because I can't travel anymore and use my Netflix for exactly that reason. So I think they have some glitches there. So I would say right now we are going to be a hold on this, potentially even a sell if we don't see that we can see the subscriber growth and see the actual growth that they're projecting in the next quarter.
Interesting, because a lot of that Netflix story has to do with this idea that through various channel checks, people say that might be the last streaming service that they cut if they have to cut their budget. So maybe that's part of the story. Let's talk about Snowflake, Rebecca. These shares are hitting another 52-week high earlier this day following another UBS call. UBS is upgrading shares to a buy and writing that the company is in the early stages of a multi-year data investment cycle. Snowflake, Rebecca, do you agree with this team at UBS?
Yeah, so I look at the actual technicals, and when you look at this, their price earning, their PE is 196.91. And when you look at the industry as a whole, it's 29.52. That's the industry kind of average. So they are extremely, extremely expensive. And to your point, Dominic, it's exactly because of this deal that they have coming. So yes, it could be a buy-in now because of the deal that they have, but I'm going to just tell you it's an expensive stock. And if that deal doesn't materialize, or it doesn't materialize to the extent necessary, then there's going to be a pullback and you're going to have some unhappy people. So I would just give this one a little bit more time before you actually execute, because it is super expensive compared to the industry. I'm not saying that it doesn't have great architecture. It's on top of AWS or Azure, and it has, a singular point of it's definitely got a long runway, but right now it's really expensive.
All right, big momentum story there. Rebecca Walser, Walser Wealth Management, the CEO there. Thank you very much. And remember, by the way, you can recap every single three-stock lunch that we show anytime you want. Just scan the QR code on your screen right there, or head over to cnbc.com/pro. Subscribers get access to all these three-stock lunches.